Hey everyone, John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to bring you my honest and professional opinion regarding the 2023 Canadian housing market. Today, I got some pretty interesting stats, but first, I just want to talk about the market and kind of the mixed reactions that we're seeing lately. And you hear stories and news and opinions. Some say, the market prices are going to recover, go up in the second half of the year, or they're going to go up in the spring. Others say, because of interest rates, they're not going to move. We're not going to see any price increases until a year or so from now. So I kind of just want to put everything into perspective and kind of itemize it so that we can kind of get a better understanding of where things are. Now, most of the media and news stories and opinions and whatnot that I see predict further declining prices. But again, you do have some that predict otherwise. And of course, we kind of tend to gravitate towards the information that suits us best, right? So if you want prices to increase, you're going to read those stories and whatnot. So first, I just want to start with this one from the Financial Post. This was on February 10th, just a few days ago. Mark Carney, of course, he is the former head or governor of the Bank of Canada, and some say our next prime minister in the future at some point. But anyway, Mark Carney says a recession is coming, but interest rates won't come down anytime soon. Okay, let's check out a brief summary of what he says. Carney's comments come as Canadians are getting mixed signals about the trajectory of the economy. Some experts believe a recession is on the way, but recent numbers seem to suggest otherwise. With 150,000 jobs added in January, Canada's economy appears to be doing better than expected. So, of course, when job numbers are increasing and unemployment is very low at near record lows, the Bank of Canada seems to think that this is inflationary, and it is inflationary, and will either keep rates or could raise rates. The pandemic was a huge shock to the economy, and Canada is only now emerging from the consequences of that period, Carney said, adding that he anticipates the effects of the crisis could linger for about 5 years. And of course, the previous data I've shown on this channel from historical trends is like a 5 year seems to be a big mark for prices to go from their highs to their lows in real estate, especially. And on the flip side of the coin, Bay Street thinks Macklem will cut rates to counter a recession in 2023, Bank of Canada survey. Survey suggests Macklem could struggle to convince investors he intends to leave borrowing costs at current levels. So investors are probably hoping that interest rates go down because it gives them more purchasing power on their investments. But anyway, like I said, you get these differing opinions. So I've put them in a table to kind of look, okay, how many are for prices going up and how many are for prices going down. So let's take a look at that. And also in the comments, let me know if I've left any out. I didn't spend days compiling this list. I kind of just brainstormed for, 20 minutes or half an hour. But let me know if you feel there's any strong ones that should be in either column. So first, the reasons prices may go up. Buyers waiting on the sidelines. This is probably the number one reason that I hear that, prices can't stay at this level. They're only going to go up. There's so many buyers waiting on the sidelines. And I agree with that. There are tons of buyers waiting on the sidelines. There's always buyers waiting on the sidelines, by the way, but there's more than usual. I agree. Now, I guess my argument is all these buyers aren't going to jump in at the same time. We've already seen some jump in 2022. We've seen them jump in now, January and February, and into the spring. We're going to see a bunch jump in, but they're all not going to jump in at the same time. So again, a valid reason, but I just don't think it's going to have the impact that a lot of people think they do. Another big one is increased immigration. And of course, we know Canada is like double their immigration targets. There's tons of immigrants coming. But again, immigrants don't buy like right when they get here, most of them. They come with $30,000 to $50,000 in savings. They have to spend a lot of that on, cars and getting set up and releasing a place. And then they need work, right? They need work, and you need to qualify for a mortgage. You need to be in that job for a certain amount of time. And so it could be anywhere from 1 to 5 years before an immigrant buys. So again, not an immediate thing, but it is a valid reason that prices may go up in the future at some point. Next reason, prices have already come down. And I guess some people believe that's it. They've come down. People are going to jump in now. I don't know exactly all the reasons, but again, I'm sure that's a valid point. Low unemployment, not a reason that I hear a lot of people pitch for prices going up, but it does make sense. Everyone has jobs. More people can afford homes and whatnot. But again, that could probably go on the other side too, meaning that interest rates will stay high with low unemployment and increasing job numbers. And the last reason is lower supply. We all know low supply usually puts upward pressure on house prices. So some valid reasons why prices may go up. Let's move on to the flip side of this coin, why prices may go down. The number one reason, in my opinion, higher interest rates. We all know higher interest rates. Well, you saw it with your own eyes. Interest rates went up in January, February last year, or March, whenever it was, beginning of the year. Right away, prices started coming down, and they've, of course, continued their downward trend as interest rates have remained high. Looming recession or a slowing economy, which our economy is slowing, not as slowing as quick as they want it, but obviously it's a valid reason. Anytime the economy slows, housing will take a hit. House prices are still high, kind of the flip side to prices have already come down, but they're still high and they still have more room to come down. Household income to the house price ratio, and this is the affordability issue. Increasing supply as opposed to lower supply. Our supply is increasing. We will see it continue to increase. And we'll see where that goes. Increasing defaults. Defaults are starting to increase. Banks have even talked about this. So another reason they may go down. We are currently in a downward price trend. And of course, the trend is your friend, right? Don't fight the trend. We're in a downward price trend. We're in a bear market, whatever you want to call it. Valid reason that prices will continue this year to go down. The simple fact that we're in a buyer's market. Buyers hold the ultimate power right now. They get to decide the prices. They get to negotiate. And of course, we see that with the prices. Instead of selling it for over 100%, they're selling for 95% in most places. Overall market sentiment. I think if someone was to tell you that the market's going to go up this year, you probably call them out on it and, ask them why. But the overall sentiment of the market that, things are slower, sales are at an all-time low, like people aren't oblivious to this. So the market sentiment would, of course, be a reason prices go down. Another big one, investors are not purchasing as much, and I would say not nearly as much. Investors used to purchase, the majority of new properties and even resale in my area. Now that they're not purchasing as much, we have tons of buyers that have come out of the market, and you see that with the number of sales. Yes, we have buyers waiting on the sidelines, but it would be a safe bet to say there was a lot more investors that are leaving the market right now or not buying than there are buyers waiting on the sidelines, end user buyers. So that's kind of my compare and contrast. Again, let me know in the comments what you think. I think I've kind of approached it pretty fairly. Of course, you know what I think. I think prices will decline further this year. Anyway, I want to move on to some stats. Now, these stats are just from my area, but they do apply to a lot of places in Canada and in Ontario especially. So the reason I kept, a smaller data set was I had to go individually through active listings to see these trends and to get this data. So I went through 305 listings in my area, which is Niagara Falls, to get kind of a consensus of what's going on with these active listings. Because in the comments, I get a lot of comments saying, like, I see the same houses coming back on the market and, they're just coming back on, sometimes the same price, sometimes lower. So I kind of wanted to analyze the listings. And there's no data that's given from our boards really to analyze the listings in this kind of depth. So I went through them and here's the data. It's pretty interesting. And again, it probably does apply to your area if you live in one of these suburban areas outside of a major metropolitan area like Toronto or Vancouver. So if you're in like the Fraser Valley or you're in Southern Ontario somewhere or many places in Ontario, Quebec, wherever, they probably do apply. So let's check them out. So out of 305 active listings, and this was from 2 days ago on Sunday, February 12th, this data was taken. Just over 50% have been on the market for 100 days or more. Now, sometimes they were canceled or expired, but collectively, they were in this listing time and recently on the market. They've been more than 100 days, over 50% of these listings. So pretty significant number. This next stat was very interesting because it kind of tells you, how many people are flipping and how many people have just got into these homes. Active listings purchased in the last 24 months. So just under 25% of the active listings in my area, in my city, were purchased in the last 2 years and are back up for sale. So that's a pretty significant number, which leads me to my next chart, which is active listings that are listed at or below previous purchase price. 5.6% of active listings in my city are listed below what the purchasers paid. Now, most of those would have been purchased in 2022, but this is not an insignificant number. Next is active listings recently canceled or expired. And you can see here, 44% of the listings out there have been canceled or expired. So for all the people that say, hey, I see the same listings come back on the market time after time, well, 44% of them do, right? And the last chart I have here is a really good representation of the market and the trend that we're in, a downward trend. Active listings with price reductions. So almost 60% of the listings in my area have had price reductions. Now, these are active listings, not sales, but still 60% is a big number that have had price reductions. So anyone that thinks prices are going up, well, look at the data, right? This led me to my next set of data, which is where are the houses selling, which price point compared to what they're listed at? Are they selling? Are they all like that ratio close? This needs to be a localized data set because when you take a huge data set on this, you're just getting an average, right? And it's just going to be even between all price points. You need this very localized so that you can see in your city, where's the sweet spot? You see a bunch of houses listed at this price. What are they really selling for? Or where are most of the homes selling? So you can see here, this is my city, Niagara Falls. The green is the new listings or listings since December 2022, and the blue are the sales. And you can see the ratio really tightens up between the blue and the green. We want to see the smallest distance between the blue and the green, which means, this is where the homes are selling, and not including the little bar graphs on the left, which of course, it's easy to sell, anywhere from 250 to 400. The closest ratio is between that 400 to 500 mark and the $500 to $600,000 mark. When you get up to the 600 to 700,000 and higher, you can see there's lots of listings, very few sales. So you can see if these people want a successful sale, they're going to have to bring their prices down because there's not a lot of buyers in that, say, $800 to $900 price range. They're all in that 400 to 600,000. Yeah, 6 to 7, not bad too, but that ratio is less than half. You have less than a 50% chance of selling your house in that price point. So I just want to add a couple of other areas here too, just to see how they're faring too and kind of how their data looks. So here is Hamilton Mountain. And again, didn't want to do all of Hamilton because it was a little bit too much data for this analysis. You can see here their sweet spot is the $600,000 to $700,000 price range. There's actually more sales than new listings. And as you get to the higher price points, that ratio drops, meaning it's harder to sell, but they still seem to have a pretty good market there in those compared to Niagara Falls. And the last area I want to look at is London South, just again, another random area I chose. So you can see their sweet spot seems to be that $500,000 to $600,000 price range also, although between $400,000 and $700,000, the sales seem to be consistent. But of course, the majority of listings, or the biggest price point of listings, are between that 600,000 and 700,000. But the sales ratio is better between 400,000 to 600,000. And of course, the lower you go, the better the ratio. The higher you go, the worse the ratio. So yeah, I thought that data was pretty interesting. Just seeing, okay, you see all these listings for 7, 8, 900,000, but in reality, most of the sales are 5, 6, 700,000. So yeah, I hope you enjoyed that data. That's all for this week. Until next week, I'll see you then.